Is that now better, Chris? I think. Sorry, bear with me 1 second. Yeah, Chris. Okay, so is that now better? There was a setting that I've just changed, so hopefully that should resolve it. Is that now better? There was yes. Okay, I think we're back. Okay, apologies for that. For that slight technical hitch which we're experiencing. Okay, good. All right, thanks, Chris. What I was explaining, I went through a bit of an introduction and things like that in terms of what this session's all about and what we look to achieve during the session, and what we were just looking at. Obviously, you didn't have any sound, but we were looking at some of the news events that are likely to impact our trading over the course of the session. And it's just important to note that we do have the Fed Chair, Jerome Powell, speaking at 3 p.m. today. So we can expect a little bit of volatility for the dollar-based markets. So the US indices and the US dollar. So I was just explaining that there's something interesting going on with the central banks at the moment. There is a shift of concern towards increasing bond yields, and that is likely to just unravel the potential or what the quantitative easing and bond buying programs are effectively designed to do. So it would put a little bit of concern on that. Now, if bond yields, especially in the US, increase, which they are in the process of increasing, it's likely to see a bit of an uptick in the US dollar. So yesterday, some of the market conditions were not that coherent. Today they are, so that's the good news. So we come on to that in a second, but just be mindful if we see some erratic price action around 3 p.m. today, then that might very well be the reason why. And that's really the only news event outside of the macroeconomic events that we deal with all the time. Okay, so let's have a little review of some of the trades first that we're currently in a buy trade in the dollar Swiss. So it was a simple case of this type of pullback condition. So if I just get up my pen, I'll explain. It'll be a bit easier to explain it to you. So what we've had is this market consolidating for quite some time, and then we get the breakout trade to the upside. So that's when we get quite interested. We had a little push to the upside, and then the market rolled over back to the downside, as you would want it to do, and just basically consolidated for 5-6 days. But what we did is we actually, moved out of that pullback. So this is your high, and we explained yesterday in some detail that we now experience a series of if this is your low, this is your higher low, and this is a higher low again, and this is the beginning of a market which is turning around. So we were looking for selling opportunities consistently. We run into consolidation, and then we start to reverse that trend, and that's one of the main reasons why we were getting into this trade to the upside. The price action over the last 2 or 3 days has been beyond awful. Like yesterday's explosive move higher, followed by a complete rejection to the upside, and now we're finding a foothold in this market to the upside again, and we're seeing a lot of this type of price action in a lot of markets actually. So it just shows the importance of some of the pillars that we're advocates of every day, which is being consistent in our decision making, try to be disciplined with our capital. We're not frivolous. We want to make sure we calculate our exposure in every trade, and what that allows us to do is to remain calm when we experience erratic price action like we saw yesterday. And like I said, there's some of the correlations didn't really fit yesterday. They're looking much better now today. And today, the market's pretty much opened and have just consistently sort of moved to the upside. So we want to try and stay in this trade now. And we'll see if these prices can close in around these kind of levels. And then we'd expect continuation tomorrow. So far so good as far as the dollar Swiss is concerned. And you can see that we've been in a bit of a downtrend now for quite some time. And we're only beginning to make a turn. Now, we're not necessarily seeing that across the dollar pairs, which may or may not prove to be a difficulty. Before I go in and just look at the euro pound trade, sorry, let me just double check something. I've got an audio feed in this here as well, so I'll keep you updated if there's any sort of news developments. Yes, so we are still in. Okay, so our turnaround trade. So we are in the dollar Swiss to the upside, and our turnaround trade in the S&P, as you can see, we've kind of rolled over to the downside. So what we do with situations like this is, and these markets they do have a little bit to consider now. Technically speaking, these indice markets are just pulling back off the highs. That's all that we're seeing so far. We identify levels of potential support. This is level 1. This is level 2, sort of in here, potential support, and you go down accordingly. So these are all potential levels of support in order to get that buy trade off. So it may be a case of getting into it 1, 2, or maybe even 3 times to actually benefit from the bounce to the upside. So we got into this yesterday and rolled over to the downside. So no major surprise really by that one. Oh, excuse me. Sorry. Apologies for that. So we've just got some selling off the highs. The selling in the Nasdaq is really beginning to kick in as these yields increase in the US. There's a bit of a shift as the market starts to reopen. You know, people won't be stuck indoors. Capital will start moving elsewhere, maybe coming out of the tech and the services, the software companies, and your tech and IT. Maybe there'll be a little bit, and that's why it's worth looking at, you know, certain sectors now that perhaps are likely to benefit from people getting out and about. And one good example is potentially the airlines. The fact that in the UK there was something like 630% increase in some of the air operators in the UK in terms of booking holidays. So you're likely to see this sort of pent-up demand. So for the last, let's say, 10 months, there's been a real focus on the sectors that are likely to benefit from people being indoors, and now it looks like it could start to shift to the service orientated sectors. They might see a little bit more of an uptick, so worth keeping an eye on these types of trends. And certainly travel is likely to improve. We won't be getting there straight away by any stretch, just likely to improve over time. So you know, will investors and traders, will they look for value in those types of stocks that have taken a bit of a hit? You would imagine so. We shall, of course, always wait and see. So the Nasdaq, again, it's just a pullback off the high. You know, if this was a pullback and we extended to the upside and we failed to make a new high and then collapsed, then it's a structural failure. At the moment, it's quite a clean pullback just from the high straight down to this level. So will we get some indecision and get an opportunity to get in at these levels? At the moment, we're looking quite bearish, so we don't want to get in the way of a falling knife. But if we get some indecision, we get some buying coming in and some momentum and price pushing prices higher, then it might give us a little bit more confidence to take that next leg to the upside. Okay, so it's quite clear to see that across certainly the S&P and the Nasdaq, we're in this kind of risk-off market condition, and I'll explain why that's important as well. It was looking favourable for a bit of a FTSE trade today to the upside. It was one of the planned trades that we were looking at, but if you break this price action down and see how do these markets behave, if we just establish these levels in here, you want to see these markets closing above these levels, and we've failed to do so. And you could take it down into the smaller. There was this one candlestick which we sat up and we started to take note of that, and then when the market closed, we were like, okay, that's quite close to the highs. Let's see if we just get the momentum through to the upside. And as you can see, it just started to roll, and then it rolled quite significantly to the downside. So this was a false breakout, and a very significant one. So when we see these levels in these markets, we want markets to behave as per our expectations. So we are looking for markets to break out with momentum to the upside, which is tick. It's the first part is done. So we've had that breakout trade. We've had the momentum to the upside, but do we see the follow through from those highs? The answer is no. So as a result, it enables us to, because we can read what's going on, it enables us to just sit on our hands and not be sort of quick to get into that trade, because what we're experiencing is just a false breakout to the upside. And unfortunately, for trend traders, we've been experiencing far too many of those recently. An awful lot of them do turn into false breakouts, and there is still some considerable volatility within often relatively tight ranges. So those are just the market conditions in which we're trading, and you can see it's getting a bit of a bounce off these levels. So if you zoom out a little bit, what we are really trading is consolidation over the last few days. So when the time comes and when there's a bit of sort of positivity regarding these equity markets, at the moment they're looking quite negative pretty much across the board. So we can safely say that we can ignore the FTSE market, which is one of the trades that we were looking at, but what we can focus our attentions on is the US dollar. So the correlations we like to see is that if the indice markets are pushing lower, which they currently are, we're in a risk-off market condition, then we might be able to find some nice opportunities with some dollar strength, and that's really going to be the focus of this today's trading. Now it's a case of determining where are we likely to see the best trade or the best opportunity if we're talking about dollar strength. The euro dollar, last night we were speaking about, and every evening at 9 o'clock for our traders we do have a trade plan webinar, so that allows us to identify the opportunities. So when we hit our trading desks in the morning, we can absolutely have a plan in which we can follow and trades to look at. And yesterday, quite simply, it's a structural failure trade to the upside, where the market, it comes up to this level in here. Let me start that again because that was a rubbish line. So markets bounce back as they do. You'd expect continuation to the downside, and you get the failure trade. So now you get the low and the higher low once more, which is the beginning of a bit of turnaround price action. We now have a high. So if this market, closes and breaks above this level, then what's that likely to do? Create a higher high, and this is beginning of a turnaround trade to the upside for the euro dollar. It's just not there yet. That's the problem. So we do like this market above the 21.67. Price has failed to close above that level. So as a result, it allows us to sit on our hands. Again, one of the pillars that we're advocates of is patience. If we get price action like this, it doesn't give us an opportunity to pull the trigger. So let's see if that's the case or not. At the moment, there's just a huge question mark over today's price action in a market like the euro dollar. Okay, so what else do we have to work with? Let's look at the pound. So we've been advocates of buying the pound now for a couple of weeks, and we're still getting that momentum trade to the upside. What I'll do is I'll just take this level so there's not too many charts. So this price has really hung around today above this high. So we could almost put a little bit of a blanket over this price action in here. So this is on an hourly chart. So we've got 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. So the last 20, 21 hours, we've just been drifting sideways with a sort of just a marginal movement to the upside. But if you're asking us what's the market condition for this trade, it's very much sideways moving. So take that into account. We were wanting markets to close with conviction above this 140.84 level. Every candlestick we can look at gives us, a bit of a question mark. We don't like that one. A bit of bearish selling candlestick. Another sort of question mark with this one, and now it looks like we're going to get another. So this isn't the condition in which to be jumping into the upside. A number of question marks followed by. So if this is our analysis from a technical perspective, we need to arrive at a decision. Do we buy, sell, or do nothing? Right now, it's there's no opportunity there. So now we can effectively just do nothing for the time being. So that's how we read this type of setup. So does it give us that dollar trade? That's the question. And at the moment, it's not great. We wouldn't want to be selling at these highs either. So what we would like to see for a sell trade in this is the market push lower and fail to make a new high, and then creates a structural failure trade to the downside. But we need to see a lot more price action for that to be the case. So maybe there's some better opportunities in other in other dollar pairs. Now the dollar yen could be a good opportunity. Just to show you very, very quickly how the yen is performing against the euro. So we're seeing the euro yen actually push marginally higher, and we look at this on the daily time frame, and we're making sort of momentum highs in the pound yen. Pound yen. So as you can see, we don't really have. We've got this interesting dynamic where the indice markets are selling off, so we're risk off. You would generally expect some further continuation, like we saw yesterday in the yen, to the downside, but we're not getting that. So the main beneficiary today with the selling that we're seeing in the indice markets is actually the US dollar. The yen is selling off quite significantly against all of these markets. So this one is the one that gives us the best sort of value, really. We've had a pullback off the highs, and we can go into this on a smaller time frame and just determine where does the opportunity sit. So we can do a little bit of technical analysis on this, take the swing low. Not too sure what that level is kind of doing at that price, but that might be a daily level, so we'll come back to it. So we're looking at this actually on a 15-minute time frame, so that probably was a daily high or a daily low. Let's have a quick look. Okay, let's just record the daily lows for now, and we'll see how this price interacts with those levels. Yeah, let's look at it on a 15-minute time frame. So this corresponds with this little daily low in here. So it's fair to say, if we just look at this swing high and this swing low in here, then what we could prepare ourselves for is a buy trade above this level, and a nice neat stop loss below the 105.18 level. So I'm just going to make a note of that. So the dollar yen buy above the 105.32. Right, and what I'm going to do is and a stop loss 105 below 105.18. So looking to buy above 105.32, 105.18. So that's really the trade that we're looking for. So we're not too far away from there. So hopefully we can get that trade off now in the next sort of 5 or 6 pips away from actually making that move to the upside. So we've done our analysis. We know which markets we want to be looking at. The question is there any better markets in any other opportunities? So we'll definitely focus on the dollar yen. And the dollar Swiss has been an interesting market. We're already in it from a much lower price. But those of you interested in potentially getting into this trade to the upside, there is a sort of viable opportunity really, again, inside this little type of range in here, where we're looking to buy just above this little handle in here. It's just been moving sideways. We like to see consolidation because we generally get some nice breakout trades when that's the case, with a nice stop loss below the 89.93, and we're up at the 90.11 level to the upside. So I tell you what we will do. We're 15 minutes away from the open, so I'll put the levels in here. Whoops. So we're looking to buy above the 90.11 now. So we're way above that. We're actually 100 pips above that level from last week. The 90.11 with stop loss below the 89.93. 89.93. So we'll have the dollar Swiss as well. So do any of these other markets give us that same opportunity? Not yet, really, is our understanding. You see, tomorrow can give us a better opportunity for the New Zealand dollar to the downside, and potentially the Aussie dollar to the downside. So you want these markets to push higher. You want the indecision for a period, and then you want the momentum trade to the downside. And currently we've got the indecision, which is great. And then tomorrow, if we start breaking these daily lows to the downside, then there is your higher probability trade to the downside. So we're in this trade on the daily time frames as well. For the euro pound to the downside, we're continuing to book in profit as this market continues to make lows on the daily time frames. We're constantly booking in that profit, and we don't know how low this market will go, so we don't want to get in its way. If we can manage the trade, manage the profitable trade as best we can, and look to keep booking in profit as the price moves lower, we'll stay in it as long as necessary. But so the euro yen, it's threatening to break out. It's probably not just a fantastic trade opportunity. The yen is quite weak. We can have a look at the So we can see that this price is really trading around these important levels. So we can absolutely look to assess. So we'd be looking to buy this market above the 148.32, 148.32 with stop loss below 148.13, 148.13. Okay, so the reason why we put these levels in is now we want the market to perform as per expectation. And if that happens, we'll engage with the trade. And if it doesn't, then we may need to just be more patient and sit on our hands. Commodities. What's important for gold is to just understand the market condition that we're in, which is, hope you agree, firmly rolling over to the downside. So whereas in other markets we were looking for lower highs and higher lows and higher highs as the market's pushing higher, this way is the opposite round. So we're looking for a high and we're looking for lower highs, and this is what we see with this market. These are all lower highs, and we get the lows, we get the lower lows, and this is just this is the way that we kind of read these markets, and it's kind of how we want to just know and understand what's going on. So this market, I hope you agree, is in this little channel to the downside. So actually, instead of looking to buy this little impulsive move, we're actually looking for opportunities to sell, because we want to stay inside these little trend lines if we can. That's the direction of the market condition, which is to the downside. So it's a little bit counterintuitive with the equity story, but the equities could bounce back over the next couple of days and this market will continue its journey lower. So they're not all in great positions, but actually, instead of looking for a buy trade, which probably feels like the most coherent trade, we're actually currently looking for some selling opportunities. So crude oil, we had moved to the upside above yesterday's high. We kind of closed on this Marubozu close, which makes us feel uncomfortable, but we had a push higher, and now we're currently trading below that level. So we do ultimately like crude oil higher. The opportunity right now is probably not fantastic, and the equity markets are continuing their move to the downside. So we've really got three trades to focus on. The first one being the dollar yen. So what I'll do is we'll split this screen into three. Okay, sorry, just got to fiddle around with this. Okay, there we go. Can't even fit in the text box. There we go. Okay, so we're looking to buy above the 105.32 with stop loss below the 105.18. So we're only talking about sort of a 15, 16 pip stop loss in this trade, potentially, if it works out well, maybe a little bit more. So potentially a decent trade there. The dollar Swiss, we'll see where this market is. Okay, So that is our buying opportunity in the dollar Swiss. And then the third market is the pound yen. So we've got our markets prepared. We know what we want to see happen. Okay. So we've got our trades. We know what we're looking to do, and you've got the opportunity just at the top of the screen of each market. And now what's our approach? If we're looking to trade these opportunities, we're looking for markets to close above those levels. If it's a false breakout, it'll just flush higher and it'll sort of reverse. So we want to see two things. We want to see markets close on ideally 15-minute time frames. You can work off 5-minute as well. But if you get a close above that, that's the first thing. And then you want to see follow through. So you've almost got two stages or two criteria that needs to be met before you actually get into that trade. And occasionally it might mean your entry is a little bit higher, but so be it. Make sure that you don't get that false breakout trade, because you want to, especially in these market conditions, you want to be able to make sure that the market gives you the confirmation that you need, that prices are likely to move in the same direction. Now, on occasion, we'll see trades like this. We'll see the breakout to the upside. We will see the momentum and the follow through, and then we see the rejection. And under situations like that, then so be it. That's the occupational hazard that's involved in trading financial markets. However, probably more often than not, we'll see these markets break to the upside and then reject relatively quickly. And under situations like that, we can step back. And I just explained a good opportunity like that to you just a moment ago. For all those reasons, we can be nice and patient, even if prices get up to these levels. We just want to watch the moves, and we're not too far away. We're probably 6 pips away in the dollar yen, sort of 8 or 9 pips away in the dollar Swiss, and the pound yen. Yeah, we're probably 10 or 12 pips away from engaging with the dollar yen. So it is really just a case of just being nice and calm and trade what we see and not necessarily what we think. So all of these markets have shown structural failures to the upside. They're high probability trades if we see continuation above these highs. So we can get into them. We know what's happening on with the equity markets, so they're selling off, so that's being reinforced as well. So it's really about stacking the odds in your favor as much as you can, and sometimes that's with the fundamentals, sometimes it's with the technicals, like we're seeing across the correlations, and of course sometimes it's kind of a sentiment based decision, like we've been seeing in the British pound. Is that sort of positivity about the UK economy and the fact that it's going to bounce back, and the vaccination rollout is very impressive and things like that. Okay, any questions, feel free to post them into the chat box. We're kind of in a bit of a waiting pattern at the moment. If there's any markets that you yourself are looking at and you want us to discuss them or to have a look at them in a bit more detail, or to give you our opinion on the opportunity, then feel free to post that into the chat box as well. Apologies with some of the technical difficulties we've been having over the last week or so, on and off. We're hopefully able to resolve them to some degree now, so fingers crossed. So we would like to see these moves occur around, the market open. So this is the perfect time of the day. You've got the whole US session with capital coming into these markets, hopefully seeing what we're seeing, and they're seeing the continuation trade across certain markets. They're seeing the same correlations. They're interpreting these markets in the same way, and hopefully that will inject a bit of capital into some of these markets. I can see the dollar Swiss is very close to getting there. So we've had the dollar yen. It's just breaking above that level. So now we're getting it. So and we're seeing a little bit of this move across the board. So we can actually. So we've got to close on the 1 minute. And the dollar Swiss is very close to breaking as well. Let's just have a quick look at the euro dollar. Yeah, that's finding a little bit of momentum further to the downside. So this market closes in about 2 minutes. So let's see if we get a green light on those trades. So we got very close to that level in the dollar Swiss, a new momentum high, the 30.11. The dollar yen has just broken above this level and it's just rolling back. So now let's see that close that we're talking about. Because what you don't want to see is, you don't want to see a close back here at 105.28 or something like that. That means it's a rejection of the high. So so hopefully we'll have a bit of action on these trades now in just a second. Not forgetting what's going on with the dollar yen, the pound yen should I say. So really we're talking about yen weakness, and we're talking about dollar strength really is the focus, and that's supported with this sort of bearish market condition for the equity markets, and the gold kind of holding its own at those levels. Okay. So you can see this as we're approaching the close, it's just kind of a strong rejection. And although we expect further upside, it just puts a question mark in our minds. Now in reality there's probably a, okay, so we've just closed that on a 5-minute time frame. So the question becomes, how much confidence do you have as a trader in this market condition? So what we've seen is some nice momentum. We've seen a nice little build up from these lows. Broadly speaking, we've seen the prices break above that 105.32 quite convincingly. We've just made a high here at the 105.36 level, and prices have just rolled off those highs. So our attention can shift to this candlestick now, which so it looks like we're getting a bit of volatility in this trade. So let's see what's happening with the, not quite getting that breakout just yet. Okay, so those of you that are perhaps just joined us, we're looking for a buy trade in the dollar yen. We're breaking out of this important level here after a series of structural failures to the upside. So it's that reversal trade. So there's still only 2 pips difference between, you know, the 105.32 and the 105.34, but it's looking positive, and we'd be happy to get into this trade. Okay, now we're getting that momentum. So what we can do is we're looking at a basically a 20 pip stop loss. So so we can look at an entry of 105, sorry, a stop loss at 105. 2 times the spread to the downside, so 105.14. 105.14 is our stop loss, and it can be a market execution to the upside at 105.36. So we just got into the dollar yen to the upside. Sorry, so you can see this. You can see this trade. So our entry is actually at the 105.38. So we're talking about a 24 pip stop loss all in all. Let's see how the other trade is performing. So it looks like we're beginning to get that little breakout trade to the upside for the dollar Swiss. Further momentum higher. We just paused marginally just because of the significant pullback, but we still closed above the 105.32. We got into it a few pips higher, but there's plenty upside in this trade. So if we look at it on an hourly time frame, we're only just reversing this little low. So what we can look at, you know, its prices, you know, pushing up to the 105.69, something like that. It'd give us a 1 or 2 times our our risk reward, and there's a bit of volatility coming into this trade as well. So now we revert to trade management. So now we're just seeing if we can just get a close above this 90.11 level. Okay, unfortunately we're going to need to pack up this webinar in just a couple of minutes time. Okay, so on the 15 minute, it's just reversing off its highs. So if we get that little rollover trade above the, in fact the 90.12, we can probably now get into this trade. Just focusing in on this price action. So look, it may be a case that we get into this above the 90.12 in shortly. So the pound yen just still looks like it's drifting sideways pretty much. The dollar yen, hopefully we get a nice sizable trade. Don't forget, we do get pullbacks in these markets, so we have to sort of tolerate those. This is why we understand how much capital we're committing to each trade. In fact, I can take that out now. That's a fundamental part of the way we trade these markets. We're disciplined with our capital. So now we're getting that little break to the upside. Okay, let's get into that trade. So we'll get into this trade as well. So a stop loss below the 89.93. So now we have the 90 cent level, so we are just straddling that level as we speak. Okay, we've got a bit of indecision really up at these highs, so the trade is still on to the upside. We just got to be a little bit patient, and it's really getting in above that 90.12 level. As soon as we get a close, we'll be looking to get into that. And the sideways moving price action here in the pound yen is worth keeping an eye out for. Okay, so these are the details really for these trades. We're already in this little buy trade, just buying this market above this level here. The dollar Swiss doesn't really want to close above that level, and the pound yen is moving sideways. But these are the trades we're going to look at. If we can pick up obviously a 2% winner, 1.5–2% winner today, you know, that's good work for sort of cherry picking these opportunities like that. And maybe we'll be able to add the dollar Swiss to the trade. So let's see how we get on with those. For those of our traders through the live trade room, we'll be posting the trade. I think it's in the middle of being posted now, into your signal service, and we'll be able to manage that through there as well, so you can keep track of the trade and see how it's performing. And we're probably quite close to getting into the dollar Swiss as well. We'll see if there's a little pullback before we get in. Not too sure, but we're in the dollar yen. That's the process, that's our thinking, that's our methodology behind these markets. Looking at correlations, looking at the fundamentals, looking at the opportunities, and which dollar pair gives us the better opportunities. And clearly today it's likely to be the dollar yen and the dollar Swiss. So on that note, guys, thank you very much for joining us. For more information, do go to the Live Trade Room website, and we'll be happy to talk you through kind of what we do. So now we're getting this move. So look, we'll take this off screen. We're going to look to probably get into that now. The market closes in any second, and we'll add that trade to our portfolio, and hopefully we'll get a little bit more dollar strength over the course of the afternoon. So fingers crossed in those markets. So look, for everyone here at the Live Trade Room, thanks very much for joining us. Do take care, and we'll speak to you soon. Bye for now.